Hi, this is Warlow from Business Loan Services and welcome to my Friday Business Finance Bulletin, my weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. So what are we going to be looking at this week? Well, we're going to be looking at late payment, what business owners want when they sell equity in their businesses. We're also going to be looking at the success rate that business owners are seeing when they're approaching their banks for finance, and also some news about the government's approach where alternative lenders are concerned. So let's crack on. Now, Angel's Den. Now, Angel's Den is an online platform for business owners who are looking to raise equity from private individuals. Now, they've done a recent survey amongst those business owners looking to sell equity, and they asked them, what were you looking for out of the whole process? And interestingly, 76% of them said, do you know what? We're not just after the money. We also want advice and mentorship. Now that's really interesting, and only 12% of them said they just wanted to take the money and run. Now that's a really important distinction for me about difference between a successful business, a moderately successful one, and a really successful one. Because I think the really successful ones are the ones who are prepared to take on external advice and support. So if you're looking to sell equity in your business, just remember you can have two types of investors. You can have the passive investor. Now, the passive investor is the one who writes out the check, hands it over and says, see you in 12 months when my dividend is due. Or you can have the active investor, and the active investor is the one who wants a seat around the table and can perhaps fill a skill gap that perhaps you have or the business generally has, and they can be there to provide support for you. So if you're thinking about selling equity, just make sure you get the right type of person on board. So what about alternative, traditional sources of finance? Well, an interesting survey from Albion Ventures. Annually, they do something called their growth report. And they went out and surveyed business owners and asked them, what is your experience now as regards getting a yes from a bank? Now, perhaps rather surprisingly, 80% of the business owners surveyed said they are getting a yes from the bank. Yeah, 80%. That really goes counter to what we hear in the media, isn't it? And that's an increase from last year where the figure was 71%. So it is quite high. But here's the thing, only for the next 12 months, only 10% of business owners have said that they're actually thinking of approaching banks for finance. So it's still quite low. Now, whether it's that business owners are being put off by approaching banks or they just don't need it, I'm not sure. But what about access to finance generally? Where does it rank as a concern? Well, it just shows that the issue is getting less and less of a problem, because in the rankings it was only ranked as 5th. So it was only the 5th place as a concern for business owners. So it just shows access to finance is getting a bit easier and it's less of a problem for business owners. Now, what about alternative lenders? Well, if the banks have said no, as we know, there are crowdfunders, peer-to-peer lending, and invoice discounting, a host of alternative lenders out there. Now, we know that the government has been really keen on promoting this alternative source of finance, just to spread the risk generally of business owners having too much lending from one source, i.e. banks. Now, I've mentioned in previous episodes that the government were thinking and looking at the possibility of forcing banks to refer businesses on to alternative lenders where the bank have said no. And that is now going to happen. Just recently, the government has announced that in the autumn of 2014, it's going to be introducing legislations to make sure that business owners don't walk out the door with just a no ringing in their ears. They are going to be walking out with a map or a roadmap of where exactly to go for alternative sources of finance. So it'll be interesting to see what that looks like when that comes out in a couple of months. Now, late payment. I've mentioned in previous episodes, this is a big concern for many business owners. Late payments lead to poor cash flow, and poor cash flow means you can't fund growth quick enough. Now, Lovett, which is a commercial law firm which specialises in the area of chasing debts and making sure that business owners follow all the necessary law to give them full backing, did a survey and they found that 82% of business owners have not updated their terms and conditions to reflect all the changes in legislation which have been brought in to protect and help them. So it means that in their terms and conditions, they don't have all of the appropriate rules that allow them to claim late payments or to claim compensation and court fees. And interestingly, only 32% of those business owners surveyed said that they have claimed late payment interest, for example, from clients where invoices were overdue. So just make sure that you are taking all opportunities to claim what is due to you. Just go on Google, or you go to your favorite search engine, type in late payment legislation, and just see there what you're entitled to claim. Now, what's my tip of the week? Well, this week is a clip from a live seminar that I delivered early in the year for Business Wales, which is an advice arm of the Welsh Government. We were delivering a series of workshops on access to finance. And in this clip, I'm going to share with you a little bit about the history of crowdfunding, how it all came about. So let's go to that clip now. Crowdfunding, probably one of the very first early examples of crowdfunding was in New York, but how the Statue of Liberty got built. Essentially, the city of New York went to the population and raised donations. And that was one of the first examples of crowdfunding, where they tapped into the population to help build and construct the Statue of Liberty. More recently, the first modern acknowledged form of crowdfunding was the rock band Marillion. You won't know. The Marillion, the rock band. Back in the 90s, they wanted to tour America, but they had no funds. So what they did, they asked their fan base, we would love to come and tour America to see you, but we can't afford to do it. Here's a bank account. If you can donate $5, $10, and if we can get a tour fund together, we'll come. And that's what they did. They literally got a pot of money together, which allowed them to tour the States. And that kind of kick-started in the arts side of the market, crowdfunding. And crowdfunding really started on the cultural and arts and music scene, where people have a very passionate interest in a particular area, and so people are more willing to donate. And it started off as a donation-based model, where people would just donate money because they're interested. They want to see people produce music, they want to see films, they want to see art, and so people just donated money. So when the credit crunch happened, somebody took a look at the industry and said, hey, look, there's this crowdfunding model there, where it's a donation-based system, or a reward-based system, where perhaps people were given free entry to a film, or were given a free CD. Why don't we monetize it? Why don't we go and tap into the crowd for loans? Because you've got all of these people here who are earning next to nothing on their bank accounts, and over here, we've got businesses who want money and can't get it. So why don't we actually put them together, so the ones with money can actually lend it? The thing is, the people with money don't know who the people are who want to borrow, and they know nothing about it. So tell you what, let's put a platform together where we stand in between, and then we can bring them together. And that's basically how crowdfunding has started, is bringing all of these people together. So I hope you enjoyed that clip and you got a little bit more of an understanding of how crowdfunding came about. If you're interested in wanting to know more about crowdfunding and how it can work for your business, just pop along to our website, that's businessloanservices.co.uk, and hunt for the crowdfunding and peer-to-peer lending tab, and you'll find a little bit more information about that. So that's it for this week. I hope you enjoyed the video as ever, and please, if you did enjoy it, feel free to share it amongst your colleagues and share it on social media and give it a like. So that's it for this week. I look forward to being with you again next Friday, and have a great, profitable and successful week. See you next time. Bye now.